Welcome to At the Market, a look ahead at Chicago area real estate. Brought to you by At Properties, the #1 brokerage firm in the region. Welcome to At the Market. We have a really exciting show for you for spring 2021. We have not one, but two PhDs joining us today. More brain power than has ever been assembled on these airwaves. So let's jump right in. If you're in the housing market right now, or you know someone who is, you know the prevailing themes. Inventory is low, demand is high, and the zeal that we saw for real estate emerge last summer has only gotten stronger this spring. But where that interest lies might be surprising to some of our viewers. And to dig into that, we have with us Sam Kling, who is a Global Cities Fellow at the Chicago Council on Global Affairs. Sam, welcome to At the Market.
Thanks for having me, Peter.
So the Chicago Council on Global Affairs and the Harris Poll recently conducted a survey about people's preferences for where they live and how they've changed during the pandemic. They talked to people from big cities, from inner suburbs, and from outer suburbs. And Sam, generally, what were the findings of this survey?
Yeah, so we were trying to get at kind of more of the cultural dimension of how people feel about the places they live, because we've heard a lot of anecdotes about, some markets are hot, some markets aren't. We've heard a lot of predictions that cities are facing a big long-term decline or an exodus of people. And what we found was that really not much sign that there's going to be a big urban exodus. We found that people who lived in suburbs were content with living in the suburbs. People lived in big cities were content with living in big cities. And we actually found that people who are living in big cities are more content living in cities than people who live in suburbs are content with living in suburbs. We asked if people could choose to live anywhere they wanted, what type of community would they live in? And in big cities, we found most of them said they wanted to live in big cities. Only 8% said they wanted to live in the suburbs. Whereas among suburbanites, about 3 times as many suburbanites said they wanted to live in either a big city or a small city.
So what's the big takeaway from the survey, and what does it teach us about the future of big cities, and in particular Chicago?
I think the big takeaway is that how people feel about cities and suburbs, that's a really big, enduring thing. And for there to be a big change in terms of how people feel about urban life or suburban life, that's a big process. And if you look at history, for example, you look at the process of suburbanization in the middle of the 20th century. That was a multifaceted process. It had multiple causes, it had a lot of help from the federal government, and it took 50 years. So, and when you look at the urban revival of the past 20 or 30 years, that's another thing that took decades. So the idea that we're going to have just a complete reversal in terms of how people see cities just over the course of a year, I think is not consistent with how these big changes have occurred in the past. I think it's pretty clear from the data that these predictions of a big urban decline don't have much evidence. I think it's very likely that America remains an urban country and cities remain the places to be. We did see evidence in the survey that people are thinking about moving to different cities than what they would consider before the pandemic. But that being said, we saw a lot of strength, a lot of enthusiasm for urban life going forward.
Yeah, that's really interesting. So cities are here to stay, it sounds like. I would encourage everyone to check out this survey. We'll put a link to it in the video. Sam, thank you very much for joining us. If you live in Chicago or you are anywhere near Chicago, I definitely encourage you to go on the Chicago Council for Global Affairs website. It's thechicagocouncil.org. I went down that rabbit hole recently. I guarantee you I will go back. There's a lot of really interesting information there. And Sam, I look forward to speaking with you again soon. Thanks for joining us.
Thanks so much, Peter.
Well, we like to crunch numbers on At the Market, but no one crunches numbers like our next guest. Dr. Jeffrey J.D. Hewings, the Director Emeritus and founder of the Regional Economics Applications Laboratory at my alma mater, University of Illinois, down in Urbana-Champaign. Dr. Hewings, welcome to At the Market.
Thank you very much, Peter. It's my pleasure to be here.
Yes, thanks for joining us. So, Dr. Hewings, across the entire Chicago metro area, we've seen a big increase in home sales activity through the first quarter of 2021. But when we look at the city data in particular, one of the more interesting factors is condominium sales. We've seen a big increase. Looking at the Illinois Association of Realtors data for February, year over year, condo sales were up 16% in the city. So I wanted to ask you, are you surprised by the numbers and what are they telling us?
I'm not surprised by the numbers because I think in a market like the one we have right now, the biggest problem has been a lack of inventory. And what we find is a disconnect between supply and demand for single family homes, but the condo market is much more fluid. There are many, many more properties for sale and buying activity has increased, but you have to be a little careful extrapolating 1 month. Now, if we see this going for the next 3 or 4 months, then we can see something of a trend. But no, I think generally speaking, condo sales have been much more robust inside the city than they have elsewhere.
Sure. Well, and I think one area where we are seeing a trend over multiple months is pricing, right? We've seen pretty robust price growth. So what do you see for price growth going forward?
I think the prices are going to continue to increase. Whether they increase at the same rate will be a function of two things. One is the supply issue that I just alluded to, which has been a real problem. And essentially, what that reflects is a reluctance of people to put the properties on the market. And I think it's that more than the fact that there aren't people out there wanting to buy it. And so people who get on unnamed television shows and make prognostications about this is going to happen, everybody's going to abandon the city and move to the suburbs or to rural areas and so forth, I think is underestimating the fact that cities are still incredibly attractive. And it's not just where the place of work is, but people want to do other things. And having spent 18 years, half time in rural America, I can tell you, I don't find it a very attractive place. It has a lot of good features, but I want access to good restaurants. I want high class medical care. I want to be able to go to the symphony. I want to attend ball games and things of that kind. And so the combination of the sort of what we would call the amenities of the city are still incredibly attractive. And I think that's fueling a lot of the growth. People still want to be here. And even though they may be able to work from home, there are other reasons why they want to stay in the city.
Yeah. All right. Well, let's check in again soon. Take another dive into the numbers. Thank you very much for joining us. Really appreciate it. And we'll talk again soon.
Thank you, Peter, for the invitation. I appreciate it. Anytime.
All right. So from academia to the trenches, we are now going to bring in At Properties co-founders, Thad Wong and Mike Golden. Welcome, guys.
Good to be here, Peter. It's great to see you.
Great to be back again.
We're talking about a topic that we've been discussing on this show really for the better part of a year, and that is the city versus the suburbs, where people are moving to, why they're moving. And we just had two really smart people on this show talking about the research that they've done and the data that they're seeing. So I want to ask you, Thad, is that research aligning with what we're seeing on the ground when it comes to people buying in the city and the burbs?
I think it aligns perfectly. And I think if you logged into our previous episodes, you will see that this is what we predicted. And I'm not surprised that there's more people from the suburbs interested in the city. When you think about it, for the last year plus, we've spent so much time at home. I think that people are naturally wanting to get out of their chair and go do things. And there are a lot more things to do theoretically in the city than there are in the suburbs. People usually head to the city for action and go to the suburbs for relaxation. So I'm not surprised at all that there's going to be a fury in the city and that people are going to be moving back to the heartbeat.
Mike, how about you? Do you think that the research aligns with the reality that we're seeing?
Yes, I completely agree with Thad's comments in that we never saw a flight out of the city like a lot of people predicted, or even people said was happening. And I do think that if you take a look at sort of the shadow market effect, there are a number of empty nesters who would naturally have moved to the city over the last 12 months. They probably put it off because when they locked everything down and the city was really shut down for a while, you probably weren't going to give up your home in the suburbs with your yard and a little more accessibility to some life. So you put it off. So I think there's actually a bunch of there's a pipeline of people who will be coming back into the city. So hearing that there are people from the suburbs looking to move into the city doesn't surprise me at all. And we're excited as the city continues to open up. The vibrancy of the city, we've said it in prior episodes, the vibrancy of the city is going to continue to show through. And we fully believe that the city of Chicago continues to improve and that the market continues to recover and people feel better and better about investing in Chicago.
That's interesting. And Mike, you alluded to the headlines. And so I wanted to ask you the perception of what's happening with city sales versus the reality of what's happening with city sales. How is that affecting the market?
I definitely think you'll find that there is a disconnect and that people would be a little bit surprised as to what they find in the city. For example, there's a lot of people who thought there was a huge flight out of the city and there's tons of homes on the market, way too much product, very much a buyer's market, and prices have been dumped down. And that's just not reality. We haven't seen massive flight out of the city. We've seen some pockets of the city, particularly some of the high-rise and luxury high-rise condos that kind of paused during the shutdown, but we're even seeing that come back now. The market is much stronger than people really perceived as to what happened last year. And buyers really are now finding that there's not tons of bargains out there and that there's not tons of choices. So I think that's the big issue from the disconnect that people will find, and that they come back in and they think they're going to find all these great deals. It doesn't really exist because the city market has remained relatively strong even throughout the pandemic.
Yeah, well, the data certainly supports that. Thad, do you have anything to add there?
No, I think Mike summed it up. Bottom line is that it's fun to have a narrative sometimes, and sometimes the narrative keeps going when the facts don't follow it.
Yes. Well, I want to shift gears and talk a little bit about the luxury market. We have seen some eye-popping sales in the single-family home market in particular in the last few months. There was an $11 million transaction at the end of last year, $9.5 million listing sold a few weeks ago, and then we just saw a $12.5 million home trade hands in an off-market transaction. What do all these sales say about the desirability of the city?
There was an article recently and they talked about all the Wall Street people, and not just from New York, but New York, Chicago, a lot of major cities where they were all down in Florida and they're all leaving and they're all coming back. And they don't want to, they basically said Florida was great for a period of time, but they don't want to stay down there. It's not a vibrant enough business community. So I do think we're seeing people come back into the city. And I also think if you're looking at some of the major prices that have been achieved recently, I think that's actually a statement on the value of Chicago. That, if people are worried about Chicago, and we're all have our concerns about Chicago over some of the political and financial issues that need to kind of get settled out here. But I think that it really is an affirmation that there's real value in Chicago, because people wouldn't be setting new price records for homes in Chicago if especially the wealthy people that can buy wherever they weren't putting their money where their mouth is and buying and investing in the city of Chicago or even in some of the collar communities.
It's much harder to leave a great city and go somewhere else. Like if you're a New Yorker, or if you're from San Francisco, or you're from Chicago, really the three dense cities in America, LA is kind of like a giant suburb. It's very hard to leave it if you love the city and you love the amenities of the city. It's incredibly difficult. When you see this many record sales on large single family homes in Chicago, it's a reflection of people's not just belief and stability, but in reality, these are large families. People buy big houses, usually not a single person, and they're establishing roots and permanency. And it's not just Lincoln Park, $8, $9, $10 million homes. It's $1.5 to $2 million homes in Bucktown. It's, $500,000 to $1.5 million in Jefferson Park and those areas and North Center. So you're seeing it throughout Chicago. There are very few single family homes on the market. And as far as luxury condos in the Gold Coast, we're starting to see that come back significantly, much faster than I think we thought.
Thad, you just mentioned the desirability of larger homes, but we've also seen some pretty interesting data from condo sales in the city where one-bedroom condo sales are actually up double digits year to date. Two-bedroom condo sales are up even more year to date. So how do you explain this, renewed enthusiasm for condo living, even if it's 1 and 2 bedroom units versus the larger three bedroom units and big single family homes?
Well, think about it. In the previous episodes, we talked about first-time buyers driving that market to be able to absorb the larger units. So an 850 to 1,000 square foot one bedroom is a palace in comparison to the small apartments that have been built recently. Some of the one bedrooms recently have been below 600 square feet that have been built. And then a 2-bedroom that's 1,200 to 1,600 square feet in comparison to 1,000 square feet is giant. So that's what I'm talking about. These first-time buyers that are not moving back into these tiny apartments that are expensive, but are buying some of these condos in the Gold Coast, River North, they are actually getting a great deal.
All right. Well, inventory is really tight right now. I mean, that's a huge theme. Everybody's talking about it. Dr. Hewings talked about it. When are we going to see inventory come back, guys? What's your best guess, with your boots on the ground knowledge?
So if I had to take a stab at it, I would say in 23. I think the rest of this year will be very similar. I think things may open up a bit in 22, but unless we see quick inflation or rates rise, the impact of the last 14 months of COVID psychologically and the desire for more space is going to take a long time for that to go out of our minds. So people want more space. They want a sense of permanency. I don't think people are as interested in living in the tiny apartments that everybody thought for a while. And I think we're going to see more movement into entry-level condominium all the way up to large single-family homes.
So 2023, Thad, that's a long time.
It's a long time. I think, the rest of this year and next year, I say 23 inventory will look more similar to 2018.
Mike, what do you think?
I'm a little more optimistic than my partner here but I do think he's right about this year. I think this year is going to continue to be tight, but I do think come spring of 22, I think we could start to see a little bit more inventory build, particularly if prices continue to rise and as sellers start to believe and see that they have more equity in their homes. And when you start to see some upward pressure on interest rates, because there will be some, we've already seen some upward pressure on interest rates, they're still incredibly low. People will get off the fence and they'll start selling to move up or to move down, depending on what they want to do. So I'm a little more optimistic that we'll see more inventory. And we saw a lot of inventory get purged out of the suburbs, and we were over inventory for years in the suburbs. But I do think there's this shadow effect of the empty nesters who push their move off. So I think we'll start to see some more inventory build in the suburban markets, potentially even later this year.
One problem when you have universal appreciation like this is that sometimes you can't afford the next step up, right? So you end up staying where you are. And so that may happen. Where people love where they live, they're got a lot of equity in their home, their home's appreciated, but when they sell it, there's not something better that they can move into.
Mike, what's your takeaway for the rest of spring market?
I think the spring market's going to continue to stay pretty tight, especially from an inventory standpoint. Interest rates are super low. It's a great time to buy. And I definitely think it's going to be much more of a seller's market the way that it's been for the last, 6 to 9 months. So I think if you're ready to buy, you should buy now, and you should be prepared to pull the trigger quickly and make your decisions quickly, because I don't think we're going to see any kind of major inventory build all of a sudden and the market flip to a buyer's market versus a seller's market, especially in 2021. Mike,
Thad, great stuff as always. Thanks for joining me. I also want to thank Dr. Jeffrey J.D. Hewings and Dr. Sam Kling. If you have questions about the local real estate market, contact your @properties agent, and we'll see you next time at the market.
Looking forward to it, Peter.
Thanks, Peter.